As of the morning of July 7th, 2025, Bitcoin trades right at $109,000, poised on the brink of a potential breakout that could see it double to $230. Oh. The secret behind this explosive uptrend lies in a classic technical formation, the cup and handle. When Bitcoin reclaims its previous all-time high and spends weeks consolidating beneath resistance, the cup, then dips briefly to shake out weak hands, the handle, it sets the stage for a runaway rally. Today, market technicians, whale watchers, and on-chain sleuths alike are aligning on one conclusion. BTC is building the perfect launchpad for its next leg up. The cup and handle pattern is textbook price action. First, it climbed to a peak in this case, around $68,000 in late 2021, followed by a gradual descent as profit-taking and macro headwinds cool momentum. That rounded bottom forms the cup. Then, as bulls reassert themselves, price retraces back toward the former high, retests it as new support, and negotiates a tight range below the peak. Finally comes the handle, a shallow pullback, typically lasting a few weeks. That flushes out the most speculative or leveraged positions. Once the handle completes, a decisive breakout, ideally on elevated volume signals, the pattern's fulfillment. On Bitcoin's monthly chart, this structure is now crystal clear. Over the past 7 weeks, BTC has traded in a narrow band between roughly $104,000 and $112,000, carving out the handle. This handle sits approximately 10% below the cup's rim, well within the pattern's ideal parameters. According to Alan, a popular trader on X, everything is going exactly as the bulls expected. Bitcoin is making positive progress in completing this pattern. His confidence is rooted in the fact that each retest of the $109,000 level has found buyers, evidence that accumulation remains the dominant force. When fully realized, a cup and handle breakout often propels the instrument higher by roughly the cup's depth. For Bitcoin, that translates to a move from the $68,000 trough all the way to around $230,000. More than a 200% increase from the current price. Such a thesis may sound ambitious, but history offers precedent. Bitcoin's own 2020 to 2021 run followed a similar trajectory. Numerous legacy assets have followed the cup and handle playbook to new highs. Key to confirming the breakout will be a monthly close above the rim of the cup at $112,000, daily on volume that exceeds the handle's average. Short-term traders will watch the 20-day and 50-day moving averages for crossovers, while momentum algorithms will kick into buy mode once the breakout candle appears. From there, initial resistance zones lie at $130,000 where traders who missed the move may reload in then at $180,000. A psychological halfway mark before the ultimate $230,000 target. Technical patterns tell only half the story. On the fundamental side, Bitcoin's share of the total cryptocurrency market capitalization, known as Bitcoin dominance BTC.D, stands above 65%, its highest level since early 2021. Such dominance indicates that Bitcoin remains the primary destination for capital and crypto, making it harder for altcoins to outshine BTC's rally. Yet history suggests that when BTC.D climbs towards 70%, an Altseason often ensues. Portfolios rotate out of Bitcoin into smaller cap tokens seeking leverage. Veteran trader Rect Capital points out that in this cycle, altcoins may not need BTC.D to hit 70% to break free. They can ignite their own mini-seasons alongside a Bitcoin uptrend. Still, Bitcoin's current supremacy underscores the pattern we're witnessing, capital aggregated into the largest, most liquid crypto asset, fueling its handle consolidation and priming it for liftoff. Even as technicals flash green, on-chain investigators unearthed a blockbuster event this week. A massive 8.6 billion United States dollars equivalent in BTC moved for the first time in over 14 years. According to analytics firm Arkham, 8 wallets hibernating since 2011 each transferred exactly 10,000 BTC to new native SegWit addresses. Crucially, there's no sign of downstream selling. Coins now rest in more modern, lower-fee address formats, suggesting a simple wallet upgrade rather than distribution to the market. ARK posits that long-term holders are modernizing their storage, preparing to hold through the next cycle rather than offloading into weakness. Such a thesis dovetails with the cup and handle itself. The shakeout phase 2018-2020 cleaned house, leaving only the most committed antifragile holders. By upgrading wallets now, these whales signal conviction in Bitcoin's trajectory toward new highs. Not everyone sees wallet upgrades as purely bullish. Research firm 10x Research warns that it's absent clear on-chain behavior indicating accumulation. These decades-old coins may in fact be dribbling onto the market to satisfy demand from institutional ETFs and corporate treasuries. As more spot Bitcoin products mature and treasury managers allocate a slice of corporate balance sheets to BTC, holders may choose to monetize small tranches even if they don't sell everything at once. This gradual sell-down theory could moderate or flatten the initial breakout rally. If long-term holders are converting Bitcoin to cash at a steady clip even as price climbs, price discovery could become choppier. Yet this scenario doesn't invalidate the cup and handle setup. It simply suggests that breakout candles may come with increased volatility and potential retests of new support levels. Traders will need to manage risk accordingly, scaling into positions and watching whale behavior for signs of renewed accumulation rather than distribution beyond on-chain data. Sentiment indicators paint a picture of cautious optimism. Crypto Fear and Greed Index has moved from a balanced 50 toward greed territory as analysts publish bullish price targets and retail chatter ramps up. Social media mentions of cup and handle and 230K have spiked by over 200% in the past week, according to sentiment tracker Lunacrush. Behavioral finance teaches us that such skews can both fuel momentum and stoke topping risk. As Daniel Kahneman's prospect theory work illustrates, investors chase gains in trending markets but also sell into peaks to lock in profits. For Bitcoin's breakout to sustain, it will need more than just narrative energy. It will require real demand from spot buyers, both retail and institutional, to absorb any supply from profit-taking. To summarize, watch these levels and triggers. $112,000 monthly close. Confirmation of cup rim breakout. $130,000 short-term omega. First resistance zone aid for initial profit-taking but potentially a dip and rip setup. $180,000 midway marker. Psychological. Halfway to $230,000 tests conviction. $230,000 pattern projection. Full measured move from cup depth. Volume confirmation is crucial. A greater than 30% increase in average monthly volume will embolden algorithms and momentum traders alike. Conversely, if BTC closes below $105,000 on a monthly basis, it risks invalidating the handle and requiring a deeper pattern retest, extending the sideways phase. The timing could hardly be more opportune. On the macro front, central banks in Europe and Japan are signaling dovish pivots, potentially easing upward pressure on U.S. rates and nudging risk assets higher. Institutional custody solutions, once a barrier now, integrate seamlessly with major exchanges, facilitating direct on-ramps for corporate treasuries. Meanwhile, Bitcoin ETFs in multiple jurisdictions continue to attract billions in inflows. Underpinning spot demand, combined with the technical perfection of the cup and handle, these catalysts converge in a way that has historically preceded parabolic runs. In 2019 to 2021, Bitcoin's own cup and handle playbook yielded a 20x increase from $3,200 to $68,000. While history never repeats exactly, it often rhymes, suggesting that the next cycle's moves could be similarly dramatic, albeit from a higher base. No script is complete without risk pointers. Key vulnerabilities include ETF outflows. Sudden reversal in fund flows could sap breakout momentum. Regulatory shocks, unforeseen policy actions such as trading bans or tax changes can send prices plunging. Pattern failure, If handle depth exceeds 15% of cup height, the pattern becomes invalid, and deeper consolidation may follow. Savvy participants will employ staggered entry strategies, Ellering buys around $112,000, $130,000, and $180,000 while placing trailing stops to lock in gains. Options traders may favor bullish call spreads to capture upside with defined risk. The cup and handle is more than a chart pattern. It's a market psychology map that distills months of accumulation and distribution into a single framework. Bitcoin's current formation aligns perfectly with its long-term uptrend, refining old highs into new springboards. With BTC.D elevated, whale wallets modernizing their holdings, and macro and institutional catalysts at play, the path to $230,000 has never looked clearer. As Alan aptly noted on X, everything is going exactly as the bulls expected. But validation will come, not from tweets or headlines, but from candles and volume. Watch for that first decisive monthly close above $112,000 when the cup's rim finally gives way, and the handle's tension releases its pent-up energy. At that moment, Bitcoin may embark on its most ambitious rally yet, doubling into uncharted territory and reshaping the narrative of this entire cycle. The countdown is on. Prepare for liftoff.